Hello, everybody. Mike Molina here. Every month I do a update to the current rate market. So I'm just going to take 1 or 2 minutes to go through some of the highlights and things that have been going on. So, of course, the two big things that have been in the news primarily have been inflation and tariffs, of course. Inflation readings month over month have been coming down consecutively for the last 6 months, so that's a good sign. Gas prices are lower, grocery prices are lower. I wouldn't say anything's cheap yet, but things are headed in the right direction, albeit painfully slow. But at least a little bit down is better than a little bit worse. Hope is that that will continue. The big thing has been, of course, the uncertainty around tariffs. And with that now having, I don't want to say concluded, but most countries have either negotiated a deal or they know what their tariff is they're going to be paid. The uncertainty that's been in the market has pretty much subsided, and we're moving forward, or I should say the market is moving forward emotionally. And so the last thing that remains is, what is the Fed going to do with the Fed funds rate? So the Fed funds rate is the basis of all lending in the country. It's not a direct it doesn't directly impact mortgage rates, but because there is a relationship, there is an impact that's felt eventually. And in this case, I think it will be felt very quickly. So let's take a look at what that might look like. So this is a probabilities table put out by CME Group. They're a Fed watch group, and they take probabilities based on what the Fed is going to do with the Fed funds rate. So you can see these are the various rates. Currently, we're at 4.5, okay? And these are the upcoming Fed meetings. So these are the dates to save. So September 17th, October 29th, December 10th, and January 28th. There's more meetings, but these are the ones that are in our most immediate future and that everybody's looking towards. So you can see the bright green is the one with the greatest probability. So next month, September, 86% chance that they're going to lower the rate. They're going to lower the rate. We know that. They're going to do that. And then in the October meeting, it's about a little over 50%. I wonder if those odds might not improve. They'll either improve or get a lot worse, depending on what happens in the economy. And then at the December meeting, 80% say that we're going to be in the 3.75 to 4% range. And then by the end of January next year, over 65% say that we're going to be in the 3.5 to 3.75 range. So these will change as time goes on, but it's looking right now like we're going to start to see some real steady decline, and it's going to be relatively quick decline, and that is a good thing. So between now and the first meeting on September 17th, we can expect a very slow and gradual decline in interest rates. Obviously, things will ebb and flow, but we're going to see a very, very slow trickle towards the downward side. That's it for me. That's what you can expect over the next few months. I'll be sending another update next month. In the meantime, if you have any questions, if you want to talk about refinancing or debt consolidation or getting a home equity loan or a home equity line of credit or anything else at all, or you need help with your loan, whether it's getting rid of PMI or what have you, please don't hesitate to call me anytime. I'm always happy to help. Thanks so much for watching. Have a wonderful day, and we'll talk with you soon. Take care.